welcome guys to my channel. This is my third video on my road to consistency. Alright, in this video I will be showing you on how to catch a counter trade using the ICT 2022 model. Alright, let's go into it. So looking at this daily range, you can see we've expanded this very year, consolidated, took out this sell side. We are in a bearish run right now, so the market is obviously bearish right now. So I'm expecting price to reach out to this down close candles right here. I extended it in time, so that's my expectation in price. So obviously we are in a bear trend, and I went long on a supposed down there. So in this video I'll be showing you how to catch a counter trend. Even when the trend is against you, you could also take a trade. So let's head over to the hourly time frame. Here in this very time, plus my trading hours is between 8:30 a.m. to 12 o'clock a.m. New York time. Let's go to the 15 minutes, by the way. 8:30 a.m. to 12 o'clock a.m. New York time. Here we opened. This is the beginning of my session. We saw price displace lower. We are in a bearish trend. Okay, it first displaced lower, taking out this very relatively equal lows below this level. This relatively equal lows, we made attempt to that very down close candle, the other block, but we didn't reach it. We saw price expand higher. So as we were moving higher, I have my eyes on these very relatively equal highs. This would be my likely target to exit all long position that I went here, because this is a bearish trend. So being long here is more riskier. So let's head down to the 5 minutes. Here you can see the very relatively equal highs I was targeting. These very relatively equal highs. You saw price deep down, take out these sell stops, expanded. There was no short-term high. This short-term high wasn't. We didn't see price run above this very short-term high. We saw price go down again, taking out these sell stops, expanded, running above this high and also this high too. So here price gave me a market structure shift. Now we have changed our structure to target these very relatively equal highs. You see price leave out a displacement, an imbalance here. Let's map it out in time. So price leave out this imbalance after the shift in market structure. We went back, filled the gap and expanded, going higher, targeting the very relatively equal highs. So the confluence here was, we first saw price displace lower after the 8:30 a.m. opening time. We saw price displace lower and went lower. The idea was to go below this level, but we didn't reach out there. We swept this very low. We failed to take out the short-term high, swept the second low, then we took out this short-term high, giving me a shift in market structure to confirm that there is a likelihood of seeing price target this very relatively equal highs. So let's head over to the 1 minute, because this is where I positioned. This is the time frame that I used in positioning. So looking at it here, the relatively equal highs, which is my draw on liquidity. We saw price swept here, failed to it. You could see here it left no shift in market structure and also no imbalance right here. We swept below, took out this very low, expanded, no imbalance on side, took out this short term high, left a fair value gap. It respected the fair value gap, but I had to wait for a 5 minute confirmation before being in that trade. We expanded, hit this very down close candle, which is another block, expanded, leaving an imbalance, a buy side sell side inefficient, buy side imbalanced, sell side inefficiency. We went below, hit this very other block too. Now this is pyramiding. As price filled this very gap right here, as price went above here, hitting this very up close candle, you see price react off this level. We went below, filled this gap, hit this very other block. By that time we have already filled the imbalance. Price left here, we have filled the inefficiency right here. So we see our price respect this very other block, expand going higher, hit the other block one more time, expanded, created a down close candle, hit it, expanded, left a fair value gap, filled it, expanded, hit this very down close candles and expanded to the upside, reaching our very target. Reaching our very target at 27,900.1. So seeing this very short term high being taken out, there is this fair value gap right here, because this was the gap I was watching, and also the down closed candle. I saw price respect it, hit it one more time before we expanded to the upside, targeting those very relatively equal highs. So let me show you the execution right away. Let me show you the execution right away. So alright, so this is the very relatively equal highs, the very relatively equal highs. You could see it here, you could see it here. So this was the short term high, we took it, the fair value gap, we expanded the down close candle, expansion, the gap. As price hit it one more time, I was reluctant on being long here, but the confirmation was obvious that I went on long here. You could see the execution marks, the tracing, and the results of the trade. So yeah, I hope you find this lecture insightful. Good luck in your trading and be safe.